Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Okay, welcome Auvorians. Welcome everyone. 10:05 a.m. Pacific time. Getting started late here. A little tied up with phone calls coming in, so appreciate you bearing with me here. Welcome everyone all around the world and our ridiculous amount of new subscribers, which is bananas. I've lost count. Today is the 26th. Welcome to the midweek, albeit a day early, software strategy session. My name is Steve Vetterl. I hopefully will be a decent captain for you for the next half an hour. So what I am sharing right now, if everybody can see my screen and hear me okay, just give me a heads up in the chat window, which is now open. The Q&A window is open as well. Questions in the Q&A, please chat for the rest of the group. Here is my email address coming in right now to the chat window. So on Telegram, which I highly suggest everybody join, just make sure you know and communicate to your team, send a text out, send the Pony Express, whatever you wish, but get the word out that we have a lot of updates coming, obviously. We've had a lot of updates. We will have more coming in the future, and that it is recommended to do a reboot of the VPS once per week. So I think this is key. We're finding that a lot of the tickets that get opened up are really not related to anything other than just resetting the VPS. We've done upgrades to it as well. Again, this is a risk-based issue, so I will make note of it as we're trying to cast this as one of the biggest pieces of news, other than the fantasticness of the growth of the group, which is great to see. Everybody's working hard. So appreciate everybody's work out there. A lot of our executive management and our developers, and as well as our team of media folk, as I like to call them, headed by Susan, doing a fantastic job with all of the stuff that is coming out. So with that being said, let's get into sharing the Forex screen. Forexfactory.com is what you should be able to see. And by the way, with one of the questions I just got, make sure you tell everybody not to send emails to me or anybody on the executive team or your leaders. Open a ticket in the back office, through the Zendesk. It's actually a really fantastic process. And that'll allow them to compile the information. Again, risk management, right? If they can put together the right data for what is maybe a common problem, they're more easily to offer solutions to it. So, captain your team in that fashion, directing everybody to open a ticket. So forexfactory.com is where I go to for my news events each week. I filter out the events, not too interested in any orange or yellow events, really just interested in red folder only. Just click apply filter. Always make sure you're looking at the current week that is at hand. So today is the 26th Tuesday. And you can see on the calendar here, we have our FOMC statement tomorrow, the 27th. This is typically a pre-prepared statement, albeit this is the first one after a new administration has taken hold. So I have no idea what's going to be said. I would just say maybe more than usual, be on alert for some kind of maybe a different tone to it, right? Remember, these markets, whether it be commodity, Forex, coinages, cryptos, equities, credit markets, all the different types of market, real estate for that matter as well, depending on where you live in the world, have been buoyed significantly by, for the lack of a better term, cash coming down upon the clouds. So that is what's called a quantitative easing, a money printing type of event. It has lifted most boats globally, including emerging markets. At some point, the music is going to stop. Now, do I mean the music's going to stop tomorrow? No. We're still in a global pandemic, even though vaccines are coming down upon we still got issues to get past. So, including increased debt levels, which is one of the primary reasons the dollar has taken its dive, as it is a devaluing event to any country's underlying currency, as I've talked about ad nauseum. So, that being said, going forward, I don't have a lot for today. So if you guys have questions, I have to take off. I got a hard stop at 10:45. I should probably take off a little earlier. Yeah, I think that's pretty much all I want to say as far as news. Let's move over to our favorite, tradingview.com. Which, by the way, for those that have this, that do not have this installed on your phone, it looks almost exactly the same, which is beautiful. So if you're traveling around, now that I have a much larger screen laptop and phone for travels all over SoCal to see clients, I can view this just as I see it here, which is really slick. So again, more risk management issues if you have common charting systems. It's a great way to sort of get exposure to technical analysis. One thing that I will note as well, because I think this is so important. See if I can drag this over here. So why don't I just refresh the screen? There we go. So this is basics of candlestick charting. I posted this on my Telegram channel. I think it's important for everybody to understand that, whether you're calling it a wick or a shadow, the key is where does the candle open? Where does it close? If it opens at a lower price, closes at a higher price, it's essentially a green day, up candle. And then the opposite, if it opens higher, it closes lower, it's a red candle. And any of the wicks are just highs and lows of the price that it made for the day. So with that being said, I've talked a lot about hammer reversal candles because they're actually one of my favorite. And if you look at the S&P, let me just drop back to the other chart. So I know a lot of you don't trade US equities, but this is just a good example of a hammer reversal candle. Okay, so if you look at the price action here of the S&P 500 yesterday, you can see that we started off at this point, it's kind of hard to see because it's almost a flat looking hammer, but we started off essentially at this level right in here, right in the 3850-ish area. We went all the way down, so took a big hit, and this was all mid-morning stuff. And then equities came roaring back and actually finished slightly higher. So anytime you see a hammer reversal candle, okay, it usually leads to a move up the next day. Now, in this case, we've gapped up and moved a bit back to almost flat. Equities, as you guys may know, have gone up globally. I know this has nothing to do with Forex, but you always want to really, from a risk standpoint, understand what's going on with, some exogenistic events like the equity markets in general, right? Or what's going on in commodities or gold, even to maybe a lesser degree crypto. Not necessarily going to direct around Forex, but I think it's important to understand what's going on just generally. So moving into the DXY, still in the range that we've seen. This is the daily chart. Not much to say there. Staying within inside these ranges has been pretty solid. So, software that is cost averaging and or has trending components to it, like a variable, can act well in a situation where the markets are moving up or down in trends and or bouncing within a particular range, or what's called range bound. Okay. Here's Euro US dollar, opposite obviously what we just saw for just the dollar. Still staying within the defined ranges. Okay. GBP USD has not broken out. But we are coming up to, I guess at the end of today can be had what's called a triple top, right? Maybe not the best chart defined program in this case, but The more times you come up and touch against a given area and the pullbacks are light, the more we're probably going to have a burst up through this area. If we spend 3, 4, in some cases 5 days, could be more, could be 2 weeks, right? The more times we come up and touch against it, the more the stops are building up above it, the more a lot of these stop hunting algos that are written by large institutions to trade these markets are going to send this up there to blast out a lot of stops. So just understand that from a standpoint of risk. If you keep coming up against this line and you're taking manual shorts, or the software keeps taking manual shorts, I mean, that's fine as it comes back down. But the more times it comes up and touches an area like this, the more the risk is it's absolutely going to burst through it and move quite a bit. That's not something you want to be accepting trades on the short side, in my opinion, once it busts through this line and has, in some cases, what's called a zipper move up. Okay. Another important note from a risk standpoint. What else do I want to say? That's pretty much it. Let's take a look at GBP JPY. Same situation, right? It's almost looks like a mirror of that. Not surprising. How much these two look like a mirror of each other right now, right? Price is different, obviously, dramatically different. Coming up into the same particular case. So for those of you accepting trades in any MAV versions or just doing any manual trading, just understand, looks like we're probably going to burst above this, provided we get some sort of maybe heads up move more south in the dollar. Okay. Euro JPY stuck inside its range still. Again, we're just looking at daily charts here. USD JPY still continuing its trend down on the longer term within the defined ranges of the green broader trend channel. USD CAD coming back against multi-year lows. No surprise, right? Weakness of the dollar, as I've targeted way back. Actually have to move to a weekly chart to get back to this. You can see where it spent some time. Probably its next stop is down somewhere in sort of a I'd probably put it somewhere in this area as its next stop, provided the dollar keeps headed down. Ultimately, you can see here looking for the 2300 area. AUD CAD, not much to tell here. The problem with these two currencies is right now, we're seeing strength in the Aussie in relation to a number of things. So I would expect this to probably move up. We got some doji candles forming, which is usually a precursor to a possible bolt up into a new area. The all-important USD CHF, again, darn near multi-year lows as we're looking actually at a weekly chart. If we move to a monthly on this, you guys can see where the big line is long-term, right in this 8,800-ish area. Okay, essentially we've already peaked below through it, had some lift off it, albeit not much to speak. It's holding that area on a monthly chart. Would not want to be accepting trades below this as a long, just under this line. We have to have a definitive break, and that typically is a couple days or more of holding underneath this support line on a daily chart. Okay, so just take a look at the 8,800 area, right? Yeah, so right in there, and let's look at that. Keep in mind that area on the yep. So it's showing up as support on both the monthly and daily charts. Euro GBP. Let's take a look at that one. I think I actually deleted that from the list. Here's GBP NZD real quick. Okay. Euro Aussie. Okay. Same thing here. It's probably surprising to a lot given the euro's strength against the dollar, right? but this is just showing obviously the strength of the Aussie in relation. Gold still stuck in a triangulation type thing. Looks like we're probably holding this line and burst a little higher. Wouldn't be a surprise. Let's take a look at the Euro GBP analysis requested. Let's take a look at the daily chart first. So notice we're spending some time now underneath this all important, look at it, like the 88.75 area. Let's just take a look at the weekly on this. So the next area of support is right around here. Arguably, you can say the first stop would be probably somewhere in this area. 86.80-ish would probably be the next stop. Probably be a pretty quick move to this area if we jump back to dailies. If we're going to continue to hold down here underneath this line. Right? So the problem with a lot of these currencies for beginners analyzing or beginners analyzing any of this technical analysis, they're thinking, well, you know, is this particular currency pair on an island by itself, right? No, it's not. There are other factors affecting this price, starting with the dollar first, right? So I always recommend looking at once the DXY move to Euro USD and then GBP USD, and then you can actually have this be your fourth level of analysis on this ring, if you will, of and seeing where. But it's be tough for me underneath this area, especially since we've had a range within the support. So technically, that is an argument that these last, what are we looking at, 5 days, 5 are still on support. They're holding. Nothing's burst down, right? I think as administration changes and or the globe, if you will, gets a feel for any thoughts on COVID curves increasing or decreasing, is going to potentially affect any stimulus packages, which is potentially going to affect underlying debt levels, if any, of the countries, which is going to affect Forex markets. So sort of like a lot of factors that need to be paid attention to before you actually get to the analysis. And all I'm looking for, obviously, to be moving into an extra caution state, is some sort of surprise to the marketplace. Number one, from a central bank, right? There's 6 of them globally, and there's a lot others that carry sort of a tertiary position in monetary policy. You want to pay attention to all of them. But outside of that, primarily it is Jerome Powell and the 12 regional Fed governors, and anything they say that's outside of the box. I'm monitoring that right now a lot more closely than I normally do. I don't expect anything to change because there's a lot of economies that are teetering on the brink because of COVID. And, the bailout packages have helped in some degrees, but for those of you that don't pay attention to state by state issues going on, Governor Newsom and all his idiots in the cabinet in Sacramento just lifted the stay-at-home order in California. So as I think and I hope for the purpose of all residents and businesses in all states, we can begin to thaw out from this and have declining curves in COVID related issues and all get back to business. I think there's a lot of people that are really depending upon that. So our prayers go out to you there. And I think it's important from risk management standpoint, as I'm on high alert and a lot of markets looking kind of bubblicious here. I just got to start reading more tea leaves. That's a tough thing to do, and occasionally I screw it up too. So just got to be able to read these tea leaves really effectively and knowing if there's any changes coming about, which I don't think is going to be a surprise to anywhere in the marketplace, but we'll have to see. So I've covered the Euro GBP analysis. Let me just have that. Take a quick look at that on the weekly. So holding support, as you guys can see here, weekly talked about. So, could you share with us your personal opinion on how some fundamentals work and how they specifically affect the strength of a currency? Bond issuing and the government purchasing them, 10-year treasury yield increases and decreases, inflation and interest. So this is actually a really good question that Alex asks. The reason I don't get too deep into that is I have a tendency to lose a lot of subscribers. Okay. So I'm trying to stay real big picture on that. But the key thing really is that how and in the United States, and we know whether it's um, bonds or countries in Europe or the U.S., the movements of the Treasury, 2, 5, 10, 30-year bonds affect a number of factors. They affect mortgage rates. They affect, banks' overnight lending rates. They affect the prime rate. There's a number of things. They affect how the numbers change in terms of LIBOR or interest rates, which are set by the London Interbank. Um, a lot of these factors get pretty deep, and I try to stay away from that because I want everybody just to learn basic technical analysis first. This is going to be one of the best things to help protect your accounts, even though systems may be trading for you in a semi or in some sort of more executing the trades for you type basis. It's still important to understand the trades that it's taking and whether or not you agree with that. Now, I'm not telling you to be smart and step in front of the software, but ideally, if there's a break of some sort of long support and or resistance, I just personally, as soon as that break takes place, if I'm paying attention to it, I probably would not be accepting trades in front of the freight train. That's really the most important thing. It's going to help your win rates. It's going to help your account profitability, and that's what the most important thing here is. So. But if you guys want, if the chorus grows louder saying, hey, Steve, that's cool, but we want you to talk more about how money supply affects that. I would first start, Alex, with that cheat sheet I posted on my Telegram channel. It's actually really good. I don't know if you guys have seen this. I talk a lot about this. See if I can find it here. Forex cheat sheet. This is in May of 2020, by the way. So let me just share the screen. All right, here we go. So this is a pretty good cheat sheet. I actually took this out of a macroeconomics book. I thought this was really good. So this goes through everything, soup to nuts, and what you were asking about, Alex. How things affect the strength of a company or a country's currency. Not asking you guys to memorize this, but I'll tell you, this is just super effective for understanding something, to the point where if you have this actually memorized, let's say a GDP number came out, like whether you're in the US or it was a European GDP number, which is gross domestic product, it came out considerably poorer than expected, right? So you'd know that, wow, this really could affect, this currency, pretty crazy. Maybe I want to stay away from, trading this particular pair or the ring that encompasses that, right? So that's the reason that from a risk standpoint, you'd want to take a look at something like this. All right. So, this is a great question. Listen to this. Any update from Auvoria Prime Legal on allowing non-MAV versions of the software to be utilized in the USA? So just a little background on this, you guys. I have been hopefully a champion for our software developers in that I don't understand personally why we have to have two different versions. Now, granted, and here's the reason for this. I know for a fact in the futures markets, okay, there are all kinds of fully automated algos. I mean, they'll do everything for you. And they were built by US developers and they trade US futures accounts. Okay. Now, maybe the developers were registered with the NFA, which is our primary entity here for the futures markets, the NFA, National Futures Association, and the CFTC, which is the Commodity Futures Trading Commission. Maybe they're registered with both as the Series 3 commodity pool operator, or CTA, which is a commodity trading advisor, right? In which case, that sort of protects that. So us becoming that type of registration, I know management is looking to explore. Where we're going with that, how far we've come down the path, is really up to Josh, Bill, and Chris, right? There has been a lot of other issues that we needed to iron out before we sort of dive into this arena. But I'm thinking personally, just because of my conversations with a couple of attorneys who were surprised, right? That doesn't mean they've rendered an opinion that MAV is not necessary. It could be necessary, right? I could be totally wrong in my analysis, right? So, but that's kind of why I was like, hey, we need to, pay these guys ridiculous fees. A lot of these guys in Manhattan are, many of them are ex-CFTC prosecutors, which kind of frankly, is the guy I want ruling on this, right? Somebody like that. So, I'll continue to try and push for that with management. At some point, it will be in the budget, and we'll chase it down, and hopefully I'm right, and we can remove MAV. But as of now, I don't know. Sorry for the long drawn out answer, but when I first saw that, when I first came in, and I got a whiff of our previous company, and this was with Trade Ringer, I'm like, why are there two different versions of this? I've seen a bazillion futures trading systems. I've probably seen 150 or 200 of them, and they're all fully automated, guys, and they trade the futures markets for an active futures account sitting at, an FCM, which is a futures commission merchant. In any case. All right. So that is all the questions. I think I'm probably going to wrap it up at this point if you guys don't have anything more. Just make sure. Do note that in the Telegram channel as well, we have all of our got both bull and bear charts. Yeah, I've got the reversal patterns, continuation patterns, and the bilateral patterns, which are mostly just the triangles I talk about. They're all posted there really well. You don't have to memorize this stuff, but it's just kind of like oh, hey, there's a double top, or, hey, maybe there's a pennant forming on this, and this could be bearish, right? So it's kind of like just looking at the different types of patterns out there. What else do I want to address? Screen sharing, back to the charts. Here we go. There's gold, by the way. Gold spot US dollar. Formed actually just recently some pretty decent support levels. 1, 2, 3, 4, 10 plus days in that level support. Oil. This could be the real kicker, quite frankly. You're looking at oil just this year. Points in the past, oil has had an effect on currencies. When it started to get to rising levels, I mean, we're talking stuff when it was over $100 a barrel, it had an effect on US dollar. So know that at some point, if oil starts going back up, as usage increases and or production is cut in some form or another, as they're talking about chopping parts or all of the Keystone pipeline off, which I think is a raging mistake, it is going to increase the cost of oil domestically. Here's the Bitcoiner. Take a look at the daily. Under this 30,000-ish area per coin, you're probably going to have people jumping off a cliff if we can close down there. But notice these two dojis, hammer reversal here. doji forming so far today. All right, cool. All right, guys. Wish everybody a great trading week. May the trades always be with you. Make sure to shout out to all your friends what I'm talking about. If you know they're not plugging in, they can always watch the recordings of these, which are posted on the Telegram channel.